And good morning. This is Sterling Smith, Director of Ag Research for ASNA Edge, and I'd like to welcome everyone to our April WASDE meeting. We have some interesting things going on, and I'd like to go ahead and start sharing some screens with everybody. First thing, let's take a look and see how the markets are doing this morning. And thus far, we have corn right now is down 3/4 cent coming into the report. July corn down about 1/2 cent. New crop down a couple of cents. We did see a little bit of a bounce in the beans overnight, and that is carrying through, and we are seeing some positive performance within the market. Excuse me, my office assistant, Pip the cat, was trying to join us here. Looking at the wheat market this morning, we're under a little bit of pressure. There was an announcement out of France this morning that we are going to see limited exports coming out of France over the next few months. It affects about 11.5 million tons globally, and that may serve to help tighten the wheat stocks a little bit, but right now we're not seeing too much in the way of impressive behavior. Kansas City wheat at 870 3/4 is currently down 5 1/4. And this is a little bit interesting. We are looking at conditions right now for Kansas City wheat, trading right around 27% good to excellent. And that is the lowest number that we have ever seen actually for wheat conditions ever anytime in the growing year. So we are certainly starting off with some problems, but right now the market is not really too well attuned to that. Looking at cotton this morning, cotton is down fractionally this morning, and not a lot of news really pushing the cotton market. We are seeing export sales continue to struggle a little bit with cotton, and that is certainly serving to keep prices very quiet. There is a very, very large fund short position in cotton, and that could create the fuel for a rally at some point. Most interesting market we actually have right now in the ag space is not the grain markets, but the cattle market. June cattle here at 163.85. That's up about 15 cents. We've seen cash cattle prices move up noticeably. And in fact, they're at the highest levels we've seen really in the last 20 years. Supplies are beginning to tighten. We're seeing cutouts begin to move up. So that's going to be trouble for the food inflation numbers, as we are going to see beef prices move up noticeably. And you can see that being reflected here in the feeder cattle, already trading up around 206. Crude oil had gapped higher last week and created an interesting chart formation, what we call an island, where it's gapped higher. And we are beginning to move back towards the upside here. The market had stalled and stagnated a little bit, but we are seeing things move higher here so far. At least today, diesel prices haven't been affected too much, but we are seeing unleaded prices move up about 4 cents a gallon today alone. Gold has also been a very strong performer of late, and we're trading north of $2,000 here, obviously. Dow's doing a little bit better today. We're seeing some good movement in cyclical stocks. S&P is a little changed, and the NASDAQ composite is just down fractionally. We'll talk about the WASDE and a couple of other reports that we have coming up here. We'll go ahead and switch screens, and we will move over to this morning, this is the April WASDE. This is the last hurrah for old crop. Starting with the May report, we will be looking at new crop. The May report will be the first look that the WASDE has at new crop. So next month's report is going to be, we're going to get back into the more interesting and exciting reports. And if everyone could hold on 1 second, I need to tend to a minor technical problem here. The office assistant is very handy, little Pip the cat, but sometimes he gets a little shaken up. As you can see, for corn ending stocks, survey has us coming in at 1.3 billion for our carryout. Last report, we came in at 1.34. We did see a little bit of a rally in the corn market um, going on. Yesterday, as you can see, we pushed higher up off of some lows that we had started to make. There are some ideas circulating that we are going to see corn ending stocks cut a little bit due to an increase in exports. With the reports in the spring, meaning February, March, and April, the USDA does not change production numbers in any way, shape, or form. So the only things that can really change the report are exports or something to change in the demand space. Feed demand doesn't really change that much month over month. We could see the potential for a change in the ethanol numbers, but again, we haven't seen anything really going on too much in the production numbers for ethanol, so I don't really see those changing too much. So this export number right here is going to be the number that is going to come into question. And most likely, if we see this number expand, we can see this post number for ending stocks for corn decline. Moving on to soybeans. Soybean ending stocks, the street is looking for right at 200 million bushels. Last time we were at 210. We have not seen a lot of good flash sales really for soybeans this spring. Exports continue to be okay at best. If we start to see China tail off noticeably, coming into the summer as South American beans come in, we could see this number potentially move higher. Also, the last time around, we did see the crush numbers come back a little bit, and that added to ending stocks. Crush margins have come down noticeably for old crop. We were trading right around $2 a bushel for the crush, which is enormously elevated and very profitable for the soybean processors. Those have come down mightily. Right now, we are trading right around $1 a bushel, so $1.10 a bushel today. So those have come back noticeably. Cotton ending stocks, again, we are not going to see much of a change for the cotton market. We have a number of things going on that are keeping ending stocks to be a little bit problematic. One of those is lagging exports and generally lagging consumption. When we look at retailers and how they have been performing, we see continued struggle with the clothing retailers. You know, during the pandemic, Lowe's, Home Depot, furniture, all of that was in vogue. Clothes fell out of fashion, as it were. We have not seen, particularly in the under 30 group, much in the way of additional clothes purchases. We have seen, casual has become very casual, and that is something that in the total macro picture can kind of weigh on cotton. Offsetting that, China is beginning to reopen more and more, and the Chinese, for a communist country, the Chinese do love to shop. And if we can see business pick up there, that's something where we could see exports pick up a little bit going into China, and some better clothing consumption would be something that would serve to help. Moving on to wheat, right now the survey has wheat ending stocks going up a little bit. We're at 576 million bushels, up from 568. The wheat market has struggled mightily. We cannot get Chicago wheat to hold above $7. Kansas City and Minneapolis have both suffered as well. We do again have the crop conditions for the winter wheat crop that are really quite bad. And in areas of Kansas, there is not a lot of chance of improvement. We're starting to get, we are on the clock on this. So that's something that can help the wheat market. Also, seeing the problems with wheat coming out of France could provide a little bit of marginal help. And the funds have short positions in Kansas City and Chicago. So there is room for some short covering going on. And that's something that could certainly change things for the wheat market. Moving on to the global numbers, if we look down here for Brazil and Argentina, Argentina soybean production last time around was seen at 33 million tons. The survey has it at about 29. The conditions in Argentina have been very, very bad, and that is something that is going to weigh on the market. And as you can see, we also have corn production for Argentina coming in. Survey's looking for about 37 million tons. It is entirely conceivable that we could see this cut on this report. We could see this cut again. While this doesn't affect U.S. ending stocks, corn and soybeans are very much a global market, And while we're seeing very good production coming out of Brazil, this drag on Argentina is something that is getting a little bit of bullish fanfare. Soybean production in Brazil, the survey came in at 153 million tons. Last time around was 153 million tons. This number could go either way. It could be a little bit bigger, it could be a little bit smaller. Brazilian soybean crops have a way of getting a little bit larger sometimes when we start harvesting them. Regardless, we are going to see record production of soybeans coming out of Brazil, and those beans are now moving and they're moving into the market. And this is something that could certainly hamper our exports going forward and weighing on the market, possibly all the way to the fall, again, depending on how our crop begins to form. For corn production for Brazil, we're looking at 125 million tons of corn. That's actually a little bit higher than the last time around. This is noticeably larger than last year to the tune of about 17 million tons. And this again for Brazil is record corn production. Brazil added a lot of acres. They didn't cut up rainforest to do it. They took pasture acres and they're now beginning to farm that. And when I say they added a lot of acres, I want you all to picture the state of Kansas. That's how many acres they added. So this is going to be something that once this pasture land is converted into productive land, this is something that's not going to go away. So Brazil gets smarter and a little better about their production every year. Thankfully, global demand does increase, and that's something that can help us out a little bit. But again, we are going to see continued growth in production coming out of Brazil, and that's going to be something we're going to have to compete with. Moving on to something completely different. Here we've got a couple of minutes before the report. We have two big economic numbers coming out tomorrow and Thursday. Tomorrow we have the CPI number, which is consumer inflation. Year over year, we came in at 6% last month. This month, the surveys to have it come down to 5.1%. Some of this is due to the extreme inflation numbers we saw a year ago, and those are coming off the calculation. That's the good news. The real number is this month over month number. We're looking at it right now at 0.4 last month, which works out to an annual rate of about 4.8%. This month, the street is looking for 0.2%, which takes it down to an annualized rate of 2.4%, which, while not quite exactly the Fed's target, it's getting very close. And this is going to have a determination on what's going to go on with interest rates, assuming we hit that 0.2 number. If we do not hit that 0.2 number, if it's 0.3 or 0.4, we are going to see some fairly nasty volatility, I think, in the stock market and the bond markets over the next couple of days. On Thursday, we have the PPI numbers, and this is wholesale inflation. And last month it came in at negative 0.1, which was a very good number because this reflects inflation in the pipeline. And we're looking for a 0.0 print this time around, so we'll see how that plays out. And the year over year number came in at 3.4%, or that's what's expected this time around. We were at 4.4. So we do have the bar set fairly high for these inflation numbers, and how that works out is going to have an effect on the value of the dollar. It's going to affect interest rates. It's going to affect the equity markets and the Fed behavior, as obviously we've been talking and hearing a lot about the forthcoming recession and everything associated with that. And these numbers were right at a tipping point. Hopefully we get some good numbers. We don't see the Fed hike interest rates, and interest rates can move lower on this, and that will send the dollar lower. That in turn makes our grain exports a lot friendlier. And we're about 40 seconds out from the report, so let's go ahead and switch the screen here. And we will see what we get off of this report, and then we'll see how the market reacts to it. And hopefully here in Omaha, it's about 58 degrees right now, and it's going to be 75 this afternoon. So I did fire up the grill and cook some brats here, but I've got some steaks waiting in the wings. So kind of looking forward to, helping out the ranchers of the world a little bit here. And we are about to get the report. And 1342, unchanged from the last time around. So they didn't do anything. The export number did stay exactly the same. Moving on to the soybean ending stocks, we came in at 210. Again, that number is unchanged from last time around, so no surprises there. Wheat ending stocks at 598. Those actually went up a little bit. We didn't really affect the export numbers and we didn't affect the production numbers. So that most likely indicates that wheat for human consumption was the area that got cut. Moving on to South America here very quickly. Brazil corn production 125 unchanged. Soybeans a bit of a surprise 154. That is a little bit higher. And moving on down to Argentinian soybean production, a bit of a bullish surprise 27 million, smaller than expected and down 6 million from the last time around. And corn was right as expected, right at 37 million. So let's go ahead and switch screens here and we'll move over and take a look at how the markets are reacting to all this. And taking a look, corn was down a couple of cents coming into the report. And with the report not really changing anything, we are down a couple of cents. Moving on to the soybeans, we were trading 3 to 4 higher. And again, the South American surprise wasn't enough to really jolt the market. I think the market is absorbed the idea that we are going to see noticeably lower supplies coming out of Argentina, but offsetting Brazil. So again, the market really didn't move too much. As you can see, we're pretty much right where we were. The wheat market did get a little bit of a bearish surprise here, but again, with the overall news flow and everything else, the market continues to be very quiet and under noticeable pressure. For cotton, the cotton numbers came out. Cotton ending stocks globally at 90.8. That was came in at actually 92 million. They were looking for about 91 million, so that is adding a little bit of pressure here. And the cotton ending stocks number was actually a little bit bullish. That came in at 410, and they did raise exports to make up for that. So we are seeing some ideas that we're going to see better exports in cotton. So my cotton quotes are delayed, but I do think that will be ever so mildly bullish for the cotton market. But again, not really enough to move or change things too much. And let's go ahead here and we're going to go ahead and stop sharing. Did anyone have any questions about any of the numbers that we came out today? Again, this report was very much as expected for corn and soybeans. There were absolutely no changes in the report. So this will be setting the stage for ideas and things we see about new crop. Planting progress right now for corn, we're just starting. We're at about 4% complete. When I was out driving around this weekend, though, I did see some signs of activity, and with the spectacular weather that's developed since Sunday, I would expect to see farmers, certainly here in eastern Nebraska and western Iowa, to start getting after it. And I wouldn't be surprised to start seeing both early corn and I think there's going to be some early soybeans going in as well. So we should be getting off to a pretty good start in this part of the world. Some areas down by where Brooks is, you're going to see some additional moisture. Brooks is not with us today. Brooks is in Washington, D.C., and as we're speaking right now, he is meeting with some members of Congress to talk about the Farm Bill and doing all that sort of thing. And I hope he's having fun in Washington. At least the weather there is nice for him. So if we didn't have any questions, given the fact that the report was largely unchanged, I think we can probably go ahead and wrap up here since the markets aren't really moving off of this. And I'd like to remind everyone we will have our third Thursday marketing meeting coming up here on the third Thursday of April. Everyone join us for that. That should be very interesting because we're going to have some progress numbers and some final ideas about South America to talk about, as well as we're going to talk about weather and the La Nina and how that is all progressing as we are moving out of the El Nino and we are now in a neutral phase, moving into La Nina slowly. We won't probably see a full-fledged La Nina until the fall, but that should indicate that we are going to get some better and improving weather conditions. And also make sure to read the daily market outlooks and listen to the podcasts as markets will obviously fluctuate and we have a lot of things going on across a lot of things. And as we start planning this new crop, that should create some more interesting markets than what we're seeing actually today off of this really rather routine report. My name's Sterling Smith, and I'd like to thank everybody for joining us today, and everyone have a great afternoon.